What is going on, investors? Hopefully guys are having a great weekend. It is Chip Stock Saturday. Here on the Investor Channel, we're going to take a look at Intel, Nvidia, and AMD, as all of these stocks are off 30% or more from their 52-week highs. Now, in the case of Intel, this company just reported their earnings last week. There'll be a link in the description down below if you want to see a more detailed view of those financials. We will kind of revisit some of them with Intel. We'll also talk about the forward guidance, some information that came out on the conference call as well. I had a lot of comments about my Intel video, a lot of Intel, fanboys, if you want to say, or certainly shareholders, maybe a more affectionate term for them. And so we'll address some of those questions and some of those concerns on today's video. We'll talk about Nvidia. This stock is down 33% from its 52-week high. Their earnings call should happen on February 16th. And then finally, we've got AMD. This stock is bringing up the rear, down 35% from its 52-week highs, and earnings come in next week, just a couple days from now on February 1st. Now, I think just based on the comments and some of the views that I've had on this channel, people like this format where we take a sector and we kind of dissect 2 or 3 or 4 stocks in the sector. Last week, it was fintech stocks. This week, it's chips. Next week, we'll bring back the EV stock show. I'm basically going to put a couple sectors in a rotation where every week expect a video here on the channel based on 3 or 4 stocks within a given sector. Next week, because we've got delivery numbers from the EV makers that are actually delivering cars, we'll talk about that next week. I think that will be appropriate. Today, we're going to focus on these chip stocks. Kick things off with Intel. The stock over the last year is down 14.8%. Now, they did just report their earnings, and Wall Street didn't like them that much. The stock actually dropped by about 4% after reporting those earnings that actually beat expectations. I think a couple of things that investors are digesting. First and foremost, I think they're digesting a little bit of the forward guidance, which came in for the first quarter of this year. The company is expecting to do about 80 cents per share in profits. That's a 40% decline from a year ago. Now, the company just reported a profit of $1.09. So we're losing cash, or we're losing EPS quarter over quarter, and we're declining year over year. That could be a problem. We also see that revenues in the upcoming quarter are expected to be about $18.3 billion, which is off 1% from a year ago basis. And it's also off of the previous quarter they just reported at $19.53 billion. Now, Wall Street was expecting these similar earnings. They were expecting 79 cents coming on that earnings side. Intel's guiding to 80. My guess is Intel will come in that 81, 82 cents per share on that earnings side. They're sandbagging this guidance to a certain degree. Now, on the revenue side, Wall Street was expecting a decline as well, and actually a bigger one than what Intel is forecasting at $17.63 billion. That's what Wall Street was expecting, and Intel just reported that they expect $18.3 billion worth of sales. We'd expect that probably to come into that 18.5, maybe even as high as 18.7, 18.8, maybe even higher than that if Intel really blows it out of the park. Now, Intel's price target was cut at Citi after guidance hurt on heavy investment and PC correction. What we are seeing with Intel is that they've moved into, and we'll talk about the story here in a moment about this CHIPS Act that's making its way through Congress, and part of it's actually already made its way through the Senate, but the company is expected to invest nearly $40 billion into new chip factories, both in Arizona and in Ohio, and this is in an effort to get Intel's manufacturing a little bit more up to speed and certainly bring some of that back here to the United States. It's also an effort to keep up with heavy investment from competitors like TSMC, and also Samsung are investing heavily in chip plants, not only around the world, but additionally here in the United States, particularly over in Arizona and I believe the New York State area as well. And so this company is in a heavy investing mode, and investors are kind of taking, I think, a wait and see approach to see how this happens, because some of it hinges on legislation actually being passed. And if you have tuned into anything that's going on into Washington, that can be kind of a hazy bet at best. And it also hinges on Intel getting these investments out in front of the industry that currently is sitting in a chip shortage, but by the time these factories and these foundries are finally finished, we're talking 4, 5, 6 years down the line. So what is the demand and the pricing on chips at that time remained? And also you have to factor in all the other chip makers are actually making similar type investments, and quite frankly are quite a bit ahead of Intel in some cases in terms of certain technology. And so I think the industry is wondering if Intel might be late to the party, and we'll see if they are. Now, what I wanted to point out was an analyst asked a pretty interesting question on the conference call, and I'll read it to you here. The analyst says, I wanted to dig into your inventory comments again. So I know you're saying you're building inventory. So Intel said that they're building inventories, but this analyst makes a great point here, but your PC volumes were down 18% year over year. The PC market wasn't down 18% year over year. So it doesn't feel like you're building inventory. If anything, it feels like your inventory is bleeding out. Okay, so what this analyst said is the PC market did pretty well last year. And we saw AMD and other chip makers take a lot of market share from Intel. And we obviously saw the shift from Apple shifting to their own silicon made by TSMC. And those laptops, we just did Apple's earnings, and their MacBooks and their Macintosh computers actually accelerated in growth in the last year or so. And so Intel is actually building their inventories, and I'll show it to you here from their balance sheet right here. So we've got our inventory down here. We've got raw material. This dates back to last year, the day after Christmas of 2020, and it takes us to the day of Christmas in this past year. So basically a full year view. You'd expect by Christmas time, if, look, a lot of the PC holiday sales had been completed. If you were going to get a new computer, you would have bought it before Christmas, right? Okay, so this shows you kind of a depletion of Christmas demand. And notice, look at raw materials, 908 to 1.4 billion. Again, keep in mind, we're in a quote chip shortage. Everybody out there, maybe some of them are using as an excuse, certain EV makers like Ford and GM, I think are using it as an excuse to not deliver as many cars as they see competitors. But we are seeing in a chip shortage, this company has plenty of raw material. In fact, they've got about 500 million more than they did last year. We went from 908 up to 1.4 billion. Here's work in progress. This is stuff that's it's not raw materials, but it's not quite finished goods. Well, you went from 5.6 billion in that up to 6.6 billion. So nearly $1 billion more in work in progress. And here's finished goods. These are theoretically chips that are ready to be put in a computer, put in some kind of device. Look at this. 1.8 billion up to 2.7 billion. This is showing you this company simply is not being able to sell through their inventory. This is, I'll remind you, in a chip shortage and also in a PC market, which is off of basically 18 months of just absolutely being on fire. We also just saw Apple's numbers and they are excellent. So we will see also, we'll follow up on some of this next week when AMD reports. They're big into computer chips as well. We'll see how their inventory stacks up, and we'll see what they're talking about demand for the PC chips. It could be that this is a great sign for AMD, which we'll talk about towards the back half of the video, because it looks like to me Intel is getting passed by here. They have plenty of raw materials, plenty of work in progress, plenty of finished goods, especially when compared to last year. And this company's sales, when you looked at them, they're basically flat. They're flat on a quarterly basis. They're essentially flat on a 12-month basis. And this company is guiding again to flat year-over-year revenues. Now, some of the shareholders of Intel very correctly pointed out, well, this company has this Mobileye business that the company expects to offer in a public offering. Now, these things can change around. Look, in any kind of stock market, you all of a sudden have the market turn against you. It's very hard to take companies like this public. But I think, and this was in relation, a lot of people were leaving me comments on the video. What I talked about was that Intel is going to invest $40 billion over the next 5 to 6, maybe even call it 10 years into foundries, both into Arizona and Ohio. And people brought up this House bill and the Senate bill. We'll talk about that here in a second. But also people brought up that, hey, they're going to take Mobileye public. Well, first of all, they haven't taken it public yet. And also, I think a lot of them don't understand what Intel says in here. Here's the key sentence. Intel will remain the majority owner of Mobileye. So they are saying that they think, and really they hope is probably a better way to say it. Intel hopes to take Mobileye public at a $50 billion valuation, okay? And I think some investors are confused thinking that $50 billion is going to be dumped on to Intel's balance sheet when they go public. That is not the case because this company, as it says here, will remain the majority shareholder. So at the very best, Intel is expected to get 51% of whatever they take public minus fees and going public cost, which tend to be rather extensive. My guess is they'll own more than 51%. They say they want to maintain a majority ownership, which means they are not selling the entire company for that $50 billion. That's just the valuation that they'll get. They'll only take in a small portion of that, again, after taxes, after regulatory fees, after all the fees that you got to pay the bankers. It might not be that much, okay? Now, it'll be great if they're able to take Mobileye public for $50 billion. I'm not saying this isn't something they should do, but here's the other thing that we need to keep in mind is Mobileye is a company over the last 12 months did we'll call it, give them credit for $1.4 billion worth of revenue. And on the earnings side, the operating earnings, this is not net income, but on the operating side, they earned $460 million. Now, the growth is fantastic. You went from 967 up to nearly $1.4 billion over the last year. That's phenomenal growth. Also, on that earnings side, you went from 241 up to this 460. So this is an incredibly high growth business, and it also appears to be profitable, at least from an operating perspective. Can you get a $50 billion valuation for a stock that's doing $1.4 billion worth of revenue in 12 months and just $460 million worth of operating income in the last 12 months? I don't know, okay? It's possible in a hot market, in a hot IPO market, in a market that's not pulling back because of Fed action or any other macro environment. Sure, maybe and possibly they're able to do that. But you have any hiccups in these markets and investors start getting turned off, well, first of all, they probably wouldn't be able to execute the IPO, or it might not be as much as the company hopes for. So those are just to temper your expectations a little bit with Mobileye in the fact that the company, yes, they might be able to take it public for $50 billion, but keep in mind that is more or less a hope and dream at this point, and also realize that Intel says that they're going to remain a majority owner in this company, so that means that they're only going to get a portion of that value moved onto the company's balance sheet. Now, the last thing people brought up is, look, there's a bill that has been already passed in the Senate. It's basically the CHIPS Act. They're going to invest $50-60 billion, essentially subsidies and money given to companies like Intel to build out these things. I'm not going to get on here and say whether or not this is a good bill or a bad bill or something I support. It's really irrelevant. But what I will say is now the United States House, this was published just today or yesterday on January 28th. Now the House is taking up their own bill. So what's going to probably happen in Congress is the Senate has already passed a bill, but the House is going to make some changes to it, and then they're going to send it back to the Senate. So this is not a done deal yet. And look, I am not going to get on here and predict what's going to happen in Washington, but the longer it kind of lingers there, again, we're running up onto an election year into November. A lot of these lawmakers will be out on the campaign trail. We also appear that we're going to have Senate confirmation of a new Supreme Court justice. That could clog some things up depending on how smooth or unsmooth that goes. I would not count this as money in the bank until it actually happens. And then also realize with any types of government funding, this $52 billion, it likely, I know Intel gave a timeline on their financials saying, hey, we would like to complete these foundries in Ohio by 2025. If they're going to be relying on government money, it's going to take way longer than that, and it's going to cost way more than that, okay? That's what we know. Whenever the government gets involved, it takes longer. cheaper and it cost way more. And so I would not be counting this as a win until these bills are actually passed, but it could be a positive catalyst for Intel in the coming weeks ahead if they're able to do that in Washington. Now, from a technical perspective, when we look at Intel, there's actually a couple things to like. First of all, this chart goes all the way back to 2013. The stock bottomed down here at about $20 per share. It has actually been locked in an uptrend ever since then. So while over the past year or so, the stock's basically flat, or actually it's down a little bit, it's still in an uptrend, quite frankly, okay? And look, there is a trading range that it's been in really since 2018. So believe it or not, it's been trading sideways for 3 or 4 years now, but it is still an uptrend. Interesting stock, okay? It is pulling back to the bottom of the range. I have that represented as kind of a green line here. That's in there in the 40-ish, $44 per share range. I could see it going. You could drop this line all the way down to $42 if you want to. And look, we're sitting at 47, okay? And historically, over the last couple of years, this stock has bounced at that range. And then I showed you the uptrend line. That is where this stock is likely to bounce. I tell you what, if Intel does not hold this level right here in the mid 40s and the low 40s, well, that's going to be ugly because you're actually going to break 2 trend lines. I talked about how we have this upper trend line right here. Well, a break below that is breaking 1 technical level. You break below our area of support, which is literally held for like 3 years. Well, now you're breaking 2 technical levels and you're coming much lower on this stock, likely well south of probably $40, maybe even south of $35 per share. Now, the other scenario that I actually think is probably more likely is we get a bounce here and we bounce back up. But then I think you meet some resistance up here at $67 per share as sellers step back into the stock. They make a little bit of short-term profit. Also, they weigh the fact this company is only marginally growing its revenues. This company is building up inventory. It has competitors that appear, at the least at the current time, to have passed it by, and Intel is essentially playing catch up because we see evidence of that in the fact that they're not growing their sales. When we look at AMD and Nvidia, these companies are growing their sales and their revenues and their profits much faster than Intel is at the current time, and we're also seeing inventory stack up in an environment where you wouldn't expect that given the shortages of chips worldwide. So that was Intel. Interesting stock from a technical perspective. I would expect it to bounce higher. If it doesn't, that means very, very, very bad news for Intel shareholders. If you're in this one and you don't want to lose money, I would set a stop loss down to here in the at the very lowest $40 per share, because if you break below that, it's showing you that this sideways consolidation and in fact this uptrend could be over, at least in the shorter term. And next stock we'll talk about is Nvidia. This stock is off 33% from its highs. They have earnings reporting on February 16th. Over the last year, the stock's up huge. I mean, it's had a monster run. It looks like it's kind of topped out here. Talk about that from a technical perspective, but this stock is still up 75% just over the last year. So a stock that has that big of a run, and then when we'll look at the valuation here in a moment, it's gotten a little stretched. So the fact this stock is pulling back, I actually think is a good thing, especially if you're in this for the long term. It probably sets up some trading opportunities as well for Nvidia. Now, the stock fell nearly 5% as it reportedly prepares to drop its $40 billion bid for ARM. And now, this company, as you know, has been locked in with regulators over the last year or so when it made a bid to buy SoftBank's ARM. SoftBank's for $31 billion back in 2016. Nvidia decided to buy it for $40 billion. ARM technology is essentially licensed to many other players in the industry, particularly companies like Apple and others use it because it utilizes technology that allows chips to run far more efficiently, especially when we're talking about batteries. So it's very effective in cell phones. It's also very effective in low power devices, but also laptops as well. There's many in the industry that believe many chips that eventually were on the old format will eventually transition to ARM's technology because it allows for a far more efficient chip with less cooling and less energy, and certainly can perform just as well, or even in some cases better, than chips that require a lot of fans and things to cool it. It would have been a great pairing, but for the most part, it looks like that deal has fallen through. Now, Nvidia and Advanced Micro Devices continue to show strength in gaming, and what they are basing this on, and especially if you've done any research on this, they note that 50% 80% of Nvidia gamers are using a GPU that is more than 5 years old, and 70% of them don't have key capabilities that have been released recently from Nvidia. Now, what they also are talking about, if you look at the secondary market for GPUs made by Nvidia, a lot of them sell for well over retail prices. So a lot of that's somewhat leading to the shortage of Nvidia GPUs is people are buying these up at retail and they're able to flip it just like people flip like Michael Jordan sneakers and baseball and football cards. People are buying these chips and GPUs at retail and then selling them. And what that is driving up the price on the secondary market. Analysts note that Nvidia will likely be able to just continue to raise their prices since it appears their pricing is too low. I think Nvidia needs to get really aggressive with their pricing so they can capture a lot of that margin and not allow the secondary market to capture more margin than in some cases they are. Now, in terms of our annual EPS estimates, this year we're expected to do $4.33 on that earnings side over at Nvidia. That gives you a forward PE of 52. Yeah, it's pretty rich, 52. Next year, you're expected to do about $5.19. That gives you a forward PE of 44. Now, again, that's pretty rich, but when you look at the growth rate this company is achieving, especially when you compare it to an Intel, which is basically not growing, well, it certainly makes Nvidia get a premium on its share price. Also, what we talked about is the fact that it looks like this company has tremendous pricing power. They can just continue to drive up the prices because people are paying higher prices on that secondary market. Now, in terms of our revenue estimates, we're at $26 billion this year. That's a forward price to sales of 21. Next year, we're expected to do 31.5. That's a price to sales of 18. Certainly rich, extraordinarily rich, right? We see companies that have price to earnings ratios in the 18s and 20s. This company is trading their price to sales, but a lot of people are expecting this company to just continue to grow and grow and grow. And we'll certainly see evidence of that. And we'll be paying close attention to it on the 16th when this company reports. Now, it looks like the stock is topped out. I mean, you don't need me to tell you this, but this is a mega downtrend on this one. And we're looking for a sign of reversal before we decide to step in. Now, there's this layer of support right here at about $228 per share. And the stock is hovering right here. It wants to hold this level. In fact, it wouldn't surprise me if the stock tries to hang out here and hold this level headed into earnings. I've got a section marked down here, kind of a green box down here. This is where I'd be excited about Nvidia because I think if you break through this level, it could pause in this $180 to $200 range. I'd wait for a sign of reversal before I stepped in there. But if this downtrend just continues, and look, there's no reason to think it won't, well, we're headed all the way back down into this box, which was sideways consolidation from September of 2020 all the way into May of 2021. There's a lot of nice price action down here if you can get this stock, and that the box is between about $110, $115 per share, all the way up to about $150. Any purchase price in here, I think that would be great. You also would be compressing these multiples. Obviously, the stock continues to go down. Your price to earnings and your price to sales goes down as well. I think that would be excellent. We're looking to buy the dip on Nvidia, but we're waiting for a sign of reversal. In the very shorter term, next couple of weeks, you'd want to break back up in here and show that this was at least temporarily a low of this bottom. But as these stocks, the old Wall Street saying goes, don't try to catch a falling knife. This is a knife falling. I would not want to step in here and try to pick it up. I would wait to see if we can break back up a little higher because look, you got plenty of upside. If this stock reverses and does a V shape or kind of a U shape recovery, you got plenty of room here. You don't need to come down here and risk your capital at 228 when you could get it up here at 238 because you could go to 238 all the way back up to 350 and retest the highs on this one because your downside is all the way back here south of 150. Okay, so you don't want to get stuck in that kind of risk reward, me personally. That's why I like it much more in this green box. If this stock just continues on a downtrend and comes into this green box, then I think, not that I would put all my capital at risk, but if this still would look like a falling knife, I wouldn't mind nibbling down in here because we have this large sideways consolidation that lasted for many, many, many months. You'd expect buyers of the stock to step in at those levels. But right now, we're waiting for a reversal. That reversal, if it comes in the shorter term, would be a break back up into the 230s, maybe even more specifically up into the 240s, showing you that this level of support held Otherwise, we're going to assume this stock is going to keep going down and we'll look to pick it up lower. Now it's time to take a look at AMD, our final stock of the day. This company reports their earnings on February 1st. We'll certainly have a video when they report. They usually do it after the bell. The stock's off 35% from its 52-week high. We'll show that to you from a technical perspective. Looks almost identical to the Nvidia chart, except we've pulled down a little bit farther. And in fact, we're a little bit closer to an area where I would expect this stock to bounce. Now, in terms of advanced micro devices, this company is acquiring Xilinx, and it appears this deal is going to go through. This is a large deal, $35 billion. I mean, this is a company with a $123 billion market cap. It's obviously been a little bit higher than that over the last few months, but you're talking about a $123 billion market cap acquiring a company of $35 billion. This is a massive acquisition, and I'm actually really excited that the regulators are going to let this go through. They got Chinese approval. Now, the company had already received U.S. antitrust approval on the deal, but it happened more than 12 months ago, so they had to reapply to that. So we'll assume that maybe they'll be able to get this through regulators. It looks like it should close by sometime next month in February. So this is a deal by Q1 will actually have closed. Now, in terms of Xilinx, you might be wondering, well, look, what's this company all about? Well, they had earnings estimates in this year at $4.45 per share, expected next year to grow to $4.67 per share. What does that look on that revenue side? They had $3.84 billion worth of revenue last year, and we've got a price to sales on that in this company. So this is what AMD is acquiring at 11.5. I just showed you Nvidia's price to sales. So this is really nice, okay? And then we've got our annual revenue percentage for the upcoming year, fiscal year 2023. They're expected to do $4.2 billion. That's only a 10 times price to sale. And I say only, I know there's a lot of stocks out there that are far lower than this, but you've got some nice revenue growth in here, and you've also had investors paying quite a premium for their earnings. So it'll be a nice combination. You might say, well, what does AMD does? So this is what AMD is going to do. They're going to do $2.65 of earnings. That's a forward P closer to 40. So they just acquired a company with a similar price to earnings. So the market is valuing these higher growth chip shots, certainly not like an Intel, but stocks like this at that mid 30s to high 30s on that PE basis. Next year, AMD was expected to do $3.37 on that EPS side. That's a forward PE of 31. Now on that earnings side, I just showed you Xilinx expected to do roughly maybe $4.2 billion worth of revenue. That's actually pretty significant to this company. This year, they're expected to do about $16.13 billion. That's a price to sales of just 7.8. Next year, they're expected to do $19.2 billion. That's a forward price to sales of 6.6. Again, now we're going to bolt on another 4, call it even 4.5 on this one. Much larger company from a revenue standpoint. That should help this company's price to sales as well, although it will blow up the balance sheet to a certain degree, and obviously maybe the equity standpoint as well in terms of the number of shares outstanding over at AMD. Now, this stock chart looks almost identical to Nvidia, made a monster move up here to about 165 and has pulled back like a falling knife off a cliff all the way down, and we are pulling back into an area of consolidation down here. We had this area of consolidation between $75 per share and up to about $95 per share. That started in July of 2020 and ended in almost to the day in July of 2021. So we've got a years of sideways consolidation with AMD. I love this stock. I've bought this stock many times down here at $75 per share. This is when I actually acquired shares of AMD, was when it was in this sideways consolidation, and anytime it was south of about $80 per share, which was several times over that span, I bought shares of this company. If we pull back into this box, I think it is a buy. Now we'll find out about the Xilinx deal. We'll see their earnings on the next conference call. I showed you Intel in the earlier segment of the show. This company is stacking up inventory, and this is an environment where they should be blowing through this inventory given the chip shortage. I think this is just I hate making predictions on here, but I think AMD is going to have a solid quarter based on what we saw out of Intel, because these two compete quite a bit into those personal computer chips, and we saw the personal computer market still did really well over the last year. Now, was it as good as the previous year? No, but there's a lot of businesses that haven't grown as much since then. But I think AMD stole a lot of business from Intel, and I think this company could recover. Now, could we bounce here? There's areas where we certainly can bounce here at 95. If we don't get into this area down here between 75 and 95, there are still areas where you can buy this stock, because I think this stock could meet some resistance back up here at 115. We could have a good earnings report. This thing pops back up here to 115, but it should find some resistance up here. As long as you stay above 95 as well, no problem. The other thing that I could see AMD doing, and a lot of stocks, is they find some area of resistance up above and they start chopping over the last few months. Because look, that's what the stock did back again from July 20 up until July of 2021. The stock literally chopped in a like $20 range. I would expect us to do that again with this stock. The combination of Xilinx, the fact that this company is gobbling up some market share, not only from the personal computer space, but also the data center as well, is certainly hurting competitors like Intel. That is a sign this company is moving in the right direction. And I think AMD is a good stock for the longer term if you get it at a good price. That was the Chip Show for Saturday. We'll be back again soon with more videos next week, including AMD's earnings. Good luck with your investments.